All right, y'all. Welcome to Winning Lending Strategies. This is our monthly session with Allie Frye, our preferred lender with Guild Mortgage. We've been in partnership with Allie for a number of years now for so many reasons because she is incredible at what she does. She's great at sharing her knowledge, and she's truly here to be a resource for both us and our clients. And this is a perfect example of that. It's a time for us to come together, see what's happening in the market. Obviously, we have a glimpse of what's happening for our buyers and sellers based on our own production, but Allie sees a lot of people. And so it's nice to kind of get a step back and see what the trends are that she's seeing, what rates are doing, and help answer the questions that our clients get most frequently. So, Allie, what you got?
So let's just jump into some creative ways. I have talked to a lot of people about buying and selling at the same time, so I thought maybe just going over one of the many options we have. Um, the biggest thing is to have options, right? And to have a plan A and a plan B and not just hope for the best. So that's one of those things that I definitely love to strategize, not only with, the buyer, but also you guys as well, because everybody has to be on the same team and get to the finish line, right? So one of the things that we do have at Guild is an in-house bridge loan. And I know a lot of people will go straight to a bridge loan if they're thinking about buying and selling and needing that flexibility. So I wanted to kind of just go over some of the features of our bridge loan. Now, there are so many different options just in this one category, and different bridge loans have different requirements and um, some will go, higher in loan amount, and some will require you to have no lien whatsoever on your primary residence that you're departing. But these are some of the features that we go by on this one specific bridge loan product. So it's essentially a 4-month temporary loan, right? So it's where you have that 4 months to get it sold, but in the meantime, get into your new house with the equity you have in it. So we can go up to $300,000, or as little as $40,000. So again, some will have higher loan amounts, and it just kind of just depends on the needs of your client. So that's another reason why you really need to just kind of strategize and see what's right for them. This is just for their primary residence, and that's where the lien will be held on that specific property, not the new home. We can go up to 80% loan to value, so they'll have to have obviously some equity into the home. And their credit score is a little higher than what like a normal conventional loan would be. So this one specifically is a 720 minimum score. It's interest only payments, and that's going to be for months one, two, and three, and then due in full the fourth month. So obviously, if it sells in a month, great, that's less interest paid. But if you go the full 3 months, that's going to be your payments, and then it'll be due the fourth month. If it's not sold by then, there are some like extension things that we can look at, but that's obviously not like the standard way. We might need to revisit doing another loan at that point if it's still not sold. Um, the rates are going to be somewhat really around where we're at for the 30-year fixed. It's currently going to be about 5.95 if you did one today. The this bridge loan can be the second lien position. There are a lot of bridge loans that you cannot have any existing mortgage loan. It has to be owned free and clear. So that's kind of where they get a little tricky for some people that obviously have an existing mortgage payment. So this one can be second lien, and it does exclude that payment on their existing mortgage. So it'll reduce their debt to income ratio and get them qualified for that new home on top of getting that equity out firsthand and using it to have the down payment. And a lot of times we can kind of layer this with a recast too. So like getting into the new home, maybe you're putting down less than what you really ideally want to put down. And then once the house sells, then you'll have a, chunk of money that you can then apply as a principal only payment and recast that. So essentially re-amortize the payment and get that reduced. Everything else stays the same as far as the rate goes and that sort of thing. And our recast, there's no fee. Some other lenders usually have like a $500 fee, give or take. Um, so that's again just one of the products for something to look at when you do have a buyer that's buying and selling at the same time. And even if they haven't put it on the market yet and they just want to kind of see what their options are. Can you pay off the loan before it expires? So yes, like if you are in going into like month two and you have the funds to pay it off, or you sold the house, then that would be obviously paid off before that month four hits. I think that's what you mean.
So, Allie, I'm assuming this is a completely separate loan that they would have to apply for as well. Is that correct?
Hmm.
Okay.
Yeah. Yeah, they would have to qualify for that. So there's debt to income ratio requirements and credit score requirements and everything like that. So Um, and we would base it off that existing home that is essentially listed for sale. So it's really just a bridge to get them their house sold and off the market and get into that new house in the meantime. That wouldn't be necessarily the first option I look at either when somebody's buying and selling at the same time. Honestly, the best bet is that they just qualify for both mortgages and they have, savings to put down to get into the new house. That's, obviously the most straightforward way. There are ways where we can get like a lease agreement if they aren't intending to sell it and they just want to offset that monthly payment that way. There's home equity lines of credit if they need to pull out some equity for that down payment. So there's so many different ways to do that. And that's one of those things that we just have to determine what works the best for them, what do they qualify for, that sort of thing. And that's more or less going through my like pre-approval call when we go over all the details of everything and kind of lay out all the different scenarios and see what the best is for them. Any other questions about a bridge loan or buying and selling at the same time for that matter? Or anybody has had any success or horror stories recently for that? Okay, well, let's dive into mortgage rates because obviously that's always the most popular topic and people want to know where we're at. So as of today, this morning, we're still right around that 6%. We've really been kind of hovering around that for a while now. This is year to date, so this is just this year for a 30-year fixed. Mortgage News Daily is my go-to for the best kind of realistic rate. It is nationwide, it is average, it's best case scenario, so 20% purchases. So it's not going to be exactly what your buyers are going to land, but it'll give you a really good idea. Um, so obviously you've seen some ups and downs, and here is kind of where we've been for the month of March, kind of just hovering around that 6%. Um, 6 and 8 is usually where we've been landing. But we've definitely had a couple 5.99, so that's been nice. Any questions on any of that? If you haven't downloaded the Mortgage News Daily app, you should definitely do that. It's easy on the go when your clients are asking you where rates are. You can pull it up and it should give you that that average right there easily. So um so rates, speaking of rates, I feel like maybe this year specifically people are just kind of sick of waiting for rates to significantly drop because they're just not going to. I think we're going to stay around that 6% most of the year. So, what is better, I think, is to focus on the payment. That's what's gonna, drive their decisions because that's what they see coming out of their account. I think a lot of times if we shift their mindset to stop focus on what that number says and look at what the payment is, it just helps make that decision and make them more confident into making that decision to put in that offer, right? So, um, when they are looking at payments and there's a way we can say, okay, well, if you ask the seller for, $5,000 in seller credits, even if that means going up in price and then getting that rate down more so we can land where your payment wants to be, or just figuring out like what that rate means to the payment. So, seller credits are still going strong. I still see them very often, and $10,000 isn't a weird thing to see. And this, table is just based off a $400,000 loan amount. So if it's a lower loan amount, you could certainly see fours. I locked one in recently with 4.875, but it was more like a $200,000 loan amount. Um, the savings is way more significant than if you have the purchase price reduced. So if you have a buyer that um, is considering an offer and you think you might be able to negotiate a seller credit and you want help with figuring out what that means as far as getting a rate reduction, then I can definitely plug that in real quick and help you there and again just make that buyer more confident in putting in that offer. Um, the influx of like questions about listings and how to help there too have been high recently. So this strategy is really good for your listings too, especially if they've been sitting there. Um, Reducing that purchase price might or list price might help, but the actual incentive for the buyers to show in their payment more is definitely going to be a seller credit. Um, so that is definitely something you could put in like the agent remarks or put flyers out in your listings. I have been able to send, you know, different scenarios for different people that have listings. Now, it's going to be based on this loan amount that the buyer comes with, so you don't really know what the buyer's going to have for their loan amount, so it's kind of tricky, but we can estimate kind of worst case scenario and say, we can give a seller credit up to $3,000 or whatever, and it'll help as far as the amount. For combining lender credits and seller credits, then obviously that's going to just make it that much more significant. But for our partnership with Choice and Guild, we can do up to 1% of the loan amount. So um, that combination can be really significant, especially if your sellers are willing to throw in a couple $1,000s to help with that. And we always just say, it can offset closing costs or it can buy down the rate permanently or temporarily. So there's several options even that way for the buyers that are coming to your listings. Any questions about that? Um, I think I say this every time, but the power of connection is really having that group email or group text even, and just having that introduction. I've seen so many people go from leads to pre-approved to buyers. So um, just introducing your lender in that way just moves the needle more and gets them off the fence more. And again, the confidence and, obviously closing on their house means everything to you guys. So that connection is a really good piece that I like to stress every time. Um, and setting up systems for it. I know not all lenders have their, systems in place, but I have seen um, a huge uptick in actual conversions when I did really drive home my systems. And I know I can see it with you guys too. So just having that group email or text to introduce. I always get on an initial consultation call that lasts like 10-15 minutes, but it helps them, you know, ask any questions, and I get to tell them what to expect for their loan application, which is the next step, and then going through the actual pre-approval. So going back to like the bridge loans if they're buying and selling, or just different options to buy down the rate if they can get X amount for the seller credit and that sort of thing, has really shown that, they're way more confident in putting in those offers and going out and pulling the trigger there. And sending specific property estimates when they are out there shopping helps a lot to know where they're at, because rates are up and down, or different purchase prices and HOA fees and that sort of thing. It's not always going to be the same exact estimated payment that we sent at the pre-approval time. And then updating the pre-approval letter once you are ready to put in that offer, whether you guys reach out to me or the buyer, and that way it can match what you guys are offering. And me letting the listing agent know that everything is good to go and just making that side more confident. And then just giving you updates, every week where when the loan process is actually active. So, kind of to go back in that process, one of the pieces is really like submitting the offers with your lender so everybody's on the same page. Um, I had one recently, it kind of like came along with this piece right here where the buyer went and got a quick pre-approval through Rocket Mortgage. So, of course, they didn't really look in any details or anything like that. It was just, here's a pre-approval letter, you're good to go. They went under contract, and it was a condo and it was FHA. So, thankfully, they have a 60-day close because we now have to put in the approval request through FHA, which can take a month. And that's like a, time killer right there. So I stress that you have a legit pre-approval, that the buyer has talked to the lender and gone over their options and that sort of thing, and not just gotten a letter and use that to put in the offer, because there's so many things that so many different lenders just don't go through, and it could be a deal killer or just, more expensive, more time, that sort of thing for everybody involved. So that was a prime example of one that I got just last week. So hopefully everything will work out with that, but um, it's you just never know if you just get a pre-approval, like a piece of paper essentially. Anyone have different scenarios or anything like that that's happened or worked out well?
Nothing exactly along those lines, but I did want to just circle back. I've heard this a few times, both with you and on our weekend wrap-up calls of um, clients actually getting just as strong of incentives from you or outside lenders from like as opposed to working with the builder's lender. And so I know that's not something we mentioned today, but I just want to throw it out there. I know a lot of times, like when we're taking clients to new construction, those incentives can sound really good, but there have been so many situations where I don't know, they want to move inventory, right? And so sometimes the builders are willing to make some concessions and then working with the lender, you just never know what you could get. So always bring those situations to Allie as well because it's always worth a conversation. And I know we all know it, but Allie is so much better than a builder's lender on so many fronts, but especially communication. And so give your lender an opportunity to play in that ring because you just never know. I wanted to just throw that out there.
Yeah, and I'm probably too honest because I'm like, you're in good hands. Like I can't beat that. So might be a struggle communication wise, but sometimes and it's mostly like the like Lennars and everything. But some of even the bigger builders like Dan Ryan and everything, it's been super easy to match and beat. And um, yeah, so definitely it's no sweat off my back to take a look at anything and to at least compare. And that way, you're doing your buyers a good thing I mean, they just look at you as more of the hero and making sure that they're taken care of and in good hands too. So, well, that is all I had. So unless anybody else has anything that they want to chime in about anything, then just let me know. Come off mute.
Allie, I just want to say thank you and tell everybody how helpful you were. My clients came to me with a pre-approval from another lender, and it was a nightmare. And I called Allie, and she kind of walked me through some of the scenarios and things. But anyway, I think we're closing on Thursday.
Good.
And
Yay.
I mean, there was delay after delay after delay with
Oh,
First Citizens Bank. So it was very nice to speak with Allie, and Allie is very knowledgeable, and I appreciate you so much. Very
thank you
much.
for saying that. That's sweet.
Cool. Well, we know that most of this stuff happens on the go, and so give Allie a call as things come up, reach out. Like she mentioned before, she has a whole process for connecting with your clients, making sure that they are handled every step of the way. So be sure to review that. The more confident your clients feel in the process, the better. So, Allie, thank you for your time. I'll be sure to send this recording out with your contact info. Thank you, everyone, for showing up
Thank
today. Have a great
you.
day.
See you guys.
Bye.